Hey, what's up everybody? Welcome back to the channel. Let's go ahead and do an update. I didn't put one out last week as we were pretty much just, watching things trade sideways and make fresh highs and stuff like that. Not a whole lot to discuss, but now I do believe we have something to talk about and we're going to talk about that. All right, so first things first, here we have Bitcoin, and this isn't the normal chart that I've been posting on Twitter and whatnot, but we're going to look at this chart simply because it's not as dirty as the other one. Let's go ahead and discuss what happened last week. So we have a trend line here that if we go out to the weekly, if I go up from the highs, this all-time high, and then skip this high and come all the way to this high, then you got this trend line. So essentially this trend line covers the wicks, and then this trend line here just goes from the old all-time high to the very next high. And you can see that we firmly broke out above that one right here. All right, that's this lower one right here. It's hard to see, I know, but that's this one right here. This week, we've currently came down, we've retested it, but you also retested old weekly resistance right here. So if you look at this on a 1 week basis, here's your 21 exponential. So we still have to be bullish based on that. And this weekly right here is actually a really good looking weekly candle for bullish continuation. But I think the daily time frame is telling us a different story when you couple in what's happening with the other markets. And we will talk about that, but just hear me out first. This is the bullish case for Bitcoin. You're above the 21. 2 weeks ago, you had a nice explosive move breaking above both the original trend line, which is this middle one here, and then the trend line that pretty much covers the closes of the candles. So this isn't right, obviously. On a line chart, I had it and it was right, but it's been changed. So let me do this and this. All right, so there you go. All right, so this is the line chart trend line. This one that cuts through here like this. And then this one's going to be that one. So you can see that. But anyways, I mean, you're above this, and that's good news. And on the weekly time frame, you did retest the 60 on the RSI. Once again, I know that if you're not listening to any of my older videos, we basically stick with the 50 when we're looking for intraday trades. Being above the 50 means that we are technically bullish. Being above the 60 means not only are you bullish, you have bullish momentum, right? Like you're getting ready to see price blast off. And essentially you can see the 60 came in here as resistance up here. And then what happened, we got that big super huge low from the yen unwind or the carry trade unwind. So that time the 60 rejected price right here. Even though you were above the 50, you made a bear trap right here. Boom, boom. There's your bear trap. Then you were up. Then you were right back down and set new fresh lows, at least on a quarterly basis. And then you held right under the 50 and you got above it. Then you went under it. So this is chop slop. But here's different. I love the fact that price started from a bullish move from down here, because being down here gives us plenty of room for the RSI to get to overbought. Right? To get way overbought and to continue that momentum in overbought territory. That's good news. But we always want to try to get bullish down here to catch however big that momentous move is. And we have caught it, right? I accidentally messed up by re-entering a new position trying to capitalize on any further bullish pressure. And then I ended up getting stopped out this week of that position. So now I'm looking for a re-entry. But I'm not so sure that I want to take it to the bullish side, and this is why. We have another rejection on the weekly, but I'm still bullish because we're above the 21 and we're above the 50. So my rules of engagement when I'm approaching these markets is simple. If we're above the weekly 21 and we're above the 50 on the RSI, I have a bullish outlook on the asset until proven otherwise. When is it proven otherwise? Back under, when we're back under the 21. That's when I really sink in bearish. But when you're choppy, moving averages aren't going to help you in a choppy environment usually. They can help you gauge trend and identify whether it's a bullish or bearish trend, but you should be able to just look at the chart and tell if it's bullish or bearish. You shouldn't need a moving average for that. I use moving averages to gauge strength of trend, which is different, right? I'm not gauging the trend. Obviously, the long-term trend is bullish on Bitcoin. It goes from the bottom left of the chart to the right-hand top. It's as bullish as it can be, but you are in a 6-month, 7-month range here. So the moving averages aren't really going to help. But anyways, we have rejected the 60 for now. And though this candle still looks good as of right now, I am a little bit concerned because of the VIX. So let's go into the daily and let's break this down. All right, so here we are on the daily time frame. Now I'm going to scooch this back down here like so because you could still see it. So basically get up all the way to that higher, that wick trend line. That trend line covers all wicks essentially, right? You just had like one little weekly flash wick above and then it was a rejection right back down to 50 grand. So here's another, this is where the sellers are stepping up, obviously. They're defending that $70,000 area higher. Now I love the fact that we're making higher highs and higher lows. All right, let's not be coy about it, right? Ever since you put in this low, you have made higher lows. Here's your next low, and there was the high to beat, and we broke it. So after we set in a higher high here, we did set in a higher low. I don't like the fact that we've lost our momentum. All right, what do I mean by that? The bullish momentum is getting beaten. Now, is it possible that it comes all the way back down and retests the 50? Yeah, it is, but at what point am I going to look at that as another failure to break out? Now, Bitcoin does love to do this stuff. When it starts its big bullish trend, it does have moves that makes you second guess the strength of that trend. But like I said earlier, we haven't had a massive bullish trend. We are in a 6-month, 7-month range. That's different, right? In a range-bound market, option sellers like myself, right? I will sell options in situations like this, not on Bitcoin, but on stocks. We will sell the $70,000, $73,000 strike calls and sell the $48,000 strike puts just to make an income, just to earn money over time, because we recognize that this asset class is clearly in a range and there's a good probability that at resistance it would probably reject. That's the whole reason that selling writing calls and writing puts exist. But this, this does show us that we are losing this. So let's go back in a time when Bitcoin was bullish, was really bullish, came back and retested that area on the RSI and lost it but regained it. So right here, we were extremely bullish on the daily time frame. You're well overbought here, and price is still melting up, turning bearish divergence even. Coming down here, holding the 60 as support. Daily support would have been formed there. We would have been looking here for bullish entries at daily support, especially since even though we did lose that 60 there, we got it right back in the next day, right? The very next day, we're right back in it. And then you're making higher closes, each with the bearish candles and with the bullish candles. So for a week here, you don't really do anything, but then you take off to the upside. So this would have absolutely been standard for bullish entries. That ain't what we have. That ain't what we have right here. Like I said, we're in a chop slot fest, and we need to break out of this. I would love to see Bitcoin be able to maintain bullish strength, like this kind of strength right through here above the all-time high. I mean, we haven't even retested the all-time high. Not one time since it was put in all the way back in March. We have not been back up there. So, that is a little bit iffy. And now here we are on the daily. We're losing the 60, which indicates that on a daily time frame, you're losing your bullish momentum. Now, it's possible that this thing takes off from here, but I'm a little bit iffy. Now, here is the underlying narrative, or the underlying issue for me, is that the VIX is right back up above 21. Here you go. I'm sorry, above 20. Here it is right there, 2032. That's where we closed Friday. I want to see that VIX roll over, and it's making another push to the upside. And then Bitcoin's failing up here when it shouldn't. I mean, you've already liquidated the majority of the liquidity up here. The next area to run to is going to be this swing high, not back down. So this is very concerning. So we lose the 60 here, right through here, boom, boom, boom. This close puts us under the 60, and then we regain it here, which was good. So we were actually looking for a breakout to come on Thursday or Friday, because we had already negotiated this range for long enough, that price had been in here long enough trading back and forth. You would have assumed that it was going to negotiate this area and continue up, and stopping out all the sellers that took advantage of shorting this daily supply zone right here. Now, we would not have taken that trade. The simple reason is because we're looking to catch these lows for the bullish breakout, because we're still structured bullish. Even on the daily time frame, if I pull up the R or the simple or the exponentials, you can see that we've retested the 21 on 2 occasions here, being Wednesday and Friday, and we have held the 21. But yesterday's close, even though it held support here, it's still disgusting. We didn't take out this candle's high. If we had, this would be an engulfing candle, because you took out the low. So that almost sets this up as a bull trap. And that's not good, because we're on the weekend now. Like, the weekend isn't going to suss this out. All right. We need big volumes, and we're going to get big volumes next week. I can prove it, because the S&P 500, its expected move is 107 points. And when you see that on the next chart, you're going to understand what I'm talking about. So this is getting kind of dangerous. If Bitcoin doesn't break out soon, and I mean like this week, I'm going to start shorting this more than likely. I'm going to start looking for areas to short, because this is looking more and more like a failure each time it gets up these prices and then rejects to the level that it rejects to. Now, it did hold Friday, and Friday was good, and it did make a higher low Friday. All right, so that's literally the only thing you got going for you right now. You've lost your momentum above 60. Once we got above 60, and then we got above overbought, or started to tag that overbought region, Bitcoin should have been taken off at this point. You got the S&P 500 making fresh all-time highs almost on a daily basis, right? You got the Dow Jones fresh all-time highs. The NASDAQ not yet, but it's almost there, right? It's almost back there. But Bitcoin is still struggling to even take out the highs that we made back in July. Like, we can't even get back up to July's highs. And then look what happened when we did get up here into the highs of July. It sold off hard, right? So this is a little bit concerning for me. As long as we're above the 50, I am going to be looking for bullish entries. But like I said, if we fail to break out next week, by Sunday next week, I am going to start looking for shorts, unless I see something in the chart that makes me go early on that. But if I decide to go early on the shorts, then I'll let you guys know. Obviously, if you're not following me on YouTube, then follow me on Twitter. I do post updates over there pretty regularly. Not as regular on YouTube as I want to be, but I'm going to move into doing that here in a few more weeks. But yeah, I mean, I'm kind of concerned. So let's go talk about the S&P 500. All right, so here we have the S&P 500. Your expected move, like I said, look at the size of this range in comparison to the last 2 weeks expected moves. They're small in comparison. And this week was the first time that we've breached an expected move to the downside or to the upside in the last 4 weeks. All right, so this is you know, it looks good. I love the fact when we breached these moves, we came down and we tested the level to perfection, the level that I was watching, the resistance. It's Q3 2024's high. We're looking for this area to get long, and I did. I shorted puts down here. All right, I shorted like $5,700 strike puts, and that trade made money in the next 2 days. So it was a brilliant little trade, but not like a massive moneymaker or anything, but still a decent trade. And I thought we were going right back up. I thought we were going to close the week out strong, but here we are Friday. We get up here, we look really good, but daily res proves to be too tough, and then boom, we close the day out red, right? But your all-time or your expected move high for next week is going to be 59.16 spot 11. Expected move low for next week, $5,700. That's a 107-point move from the open, or from Friday's close, I should say, because you can gap up or down on Monday with this. So from Friday's close, you got 107 points higher or 107 points lower. And with the VIX being back up at 20, I mean, Yeah, it's not looking great. Now, I do like it when the expected move puts in moves like this because a lot of times sellers will jump heavy into the market expecting a lower expected move, expecting this to kind of be the head or the top of the market, if you will. So I do like when the market does that because in a lot of cases it will go up and breach that expected move range high. And then when it does stop out those people like it did here, you get another nice run back up. So we'll see what happens if tech starts to pick back up. Then we do have tech earnings next week, by the way. Next week you got real big earnings, Microsoft, Apple, huge earnings. So that will move the market. It absolutely will move the market. So we're going to be very, very, very active next week, in my opinion. But there's your expected moves. We did test support. We did hold support, but resistance, slapped it back down to last week's low, and then it closed above. So this is what it looks like on a weekly, right? It doesn't look great, but it doesn't look terrible either, right? It doesn't look terrible. I mean, you could have a week or two of a pullback and still look bullish. You're still bullish. You're still structured bullish and everything, but yeah, it's just a little bit concerning that we have been making all of these fresh all-time highs on this and the Dow Jones and haven't been able to get the VIX back down to the 12 area. Now let's go look at the VIX. Here's the VIX, and I was assuming we were done when we put in this close on this weekly because it was lower than all these other high weeks up in here. And the markets take time, and it still could be done. It's just going to take a little bit more time. But here's the rub. You, on this week right here, you just traded back down to this bullish candles range and essentially caught support. And this week, you closed as a bullish weekly higher than this close. That's not good. We want to see lower closes, not higher closes. So meanwhile, the S&P 500 is not able to beat the VIX down. People are still basically positioning themselves in the VIX, expecting the market to roll over. And it's still the same thing. They're not positioning themselves out for 30 or 45 days. They're doing it literally within 2 weeks. So they're not putting on any long-term risk. And I don't blame them because we do have an election coming up real soon, right? We have that. And, there's a lot of risk out there. So the market's pricing that risk in. Hopefully it doesn't eventually roll over and we can get back to being bullish because it's just so much easier to make money in the markets when the markets are just bullish. You know what I mean? You could just get long or just short puts and just keep doing that. Rinse, repeat. Grow your account. It's just a lot easier. But hey, we make money if the markets go down too. It's all good, right? Because I'm not going to be doing that by buying puts on the S&P 500 because with the VIX up here at 20, that's high. That's a very high VIX. Like, make no joke about it. Just because you got up to 65, this is death defying. This is the end of the markets as we know it, pretty much. When the VIX is making pushes up to 65, like that's insane. But the fact that since then, we've been making these higher lows and doing this wedge formation. I mean, this isn't a trending asset. It's more of an oscillating asset. But the S&P 500 has been making fresh all-time highs. This should already be back down under 15 at least, in my opinion. And we're not. Each time we got down to 15, in fact, we bounced. So people are buying puts when the VIX gets down into the 15 area and price is starting to migrate higher again. So there's a lot of people hedging out for this short-term volatility. So keep that in mind. And that is one thing that worries me about Bitcoin because Bitcoin is a risk on asset. So essentially, if people are looking to hedge, they're going to be looking to hedge their Bitcoin portfolios as well. We shorted this Euro USD trade a long time ago because we were looking for a dollar low to come in based on cyclical analysis. That trade is still on and popping. So in a sense, I've already realized a lot of gains from this trade, right? And you can see that I have my stop loss moved down to about roughly halfway. So if we do get a bounce all the way back up to here, I will lose a little bit of money here, right? Because if I get triggered here, that's what I can expect to take home instead of this. So what I can do is I can go ahead and cut this position back by another, 2/3 and just hold one lot instead of three, right? I could do that. And that's one way to play it. and then bring the stop down a little bit lower or leave the stop here. But I did take a short on USDJPY, and I did attempt it twice, right? I attempted it once at the 2022 swing high here, and then I got in again expecting this day to be a trap like this, because when we traded up to this area right here should have acted as some sort of resistance. You can see this wick came in and perfectly tested that. This price is the 2022 swing high. This is where the BOJ intervened. It is a massive level, and you can see just how big of a level it was. Right there, it thwarted the downside, and you got a 4-day bounce here, and then here's the breakdown candle. So a lot of volume on the sell side up here, enough to push that through there. That way they didn't have to retest that, right? So that way you just got the breakdown, and then you got your downside continuation. So coming back up here, right? Coming back up here, and then to just blow right through it like that, to me, it just didn't sit right. So this right here, this level is 2-week resistance, and that's why I took the short right on that price. All right, so as price pushed up through it, it triggered me into short. I threw my stop above the high, and we'll see what happens. All right, I don't really care if I get stopped out of this trade because I've already made the money on that Euro USD trade. That's better than a 10x trade. All right, so that was a fantastic trade. But here is that swing high there, and then it comes into play all through here, right? And then it comes back into play there. I mean, it's just a massive level. And then there's the origination of that level. Yeah, we shorted this based on a dollar short, and we captured most of that downside in 2022. So I'm looking at the dollar to be weak based on the macro that, yeah, if we're going to cut interest rates, then that should be bearish for the dollar. It's as simple as that, right? And there is a bearish technical setup to take here. And as far as the yen carry trade, yeah, I don't believe that's, I mean, you're cutting interest rates. The carry trade was so big and so strong because you had a 5% interest rate on the USD and a negative interest rate on the Japanese yen. Now you have a positive, 10 or 25 on the yen, and now you're dropped almost, 50 basis points off of that. So there's 60 basis points that you won't get from the carry trade, and that's just going to get worse as time goes on if the Fed continues to cut, which they probably will, right? So this is just me trying to, capture a potential big down move on this if this all up move right here was just based on a short covering rally. This is a massive move higher here. So this has some kind of fundamental basis to it. This ain't just a short covering rally like I thought it was. But when you get up into around 102, 102.5, that's about as far as I would expect a short covering rally to go, especially seeing how once you broke down below the 2023 yearly opening range right here back in August, how fast them sellers came back to the marketplace. They rushed it. They didn't even allow a wick to go back and retest the yearly opening range of 2023, not 2024. This is 2023's yearly opening range. Down here's the yearly range for 2024, but still, it is an area of support nonetheless. It was tested here, and you got a 2-3 week bounce out of it. So the fact that the sellers rushed back in there and beat this thing down into submission without even allowing it to get back up to 103.66 tells me that there's a huge chance that they would have done it here. So a lot of people jumped on this thing to the short side way down here. We were going to let it play out up to here because this is the real level that, started to come into play. There's other levels down here, obviously, but this is a big level here, massive level. So we are going to let it play out, see how far it went, see if price started to roll over. It never did, guys. You got how many bullish candles in here, right? This ain't rolling over here. This ain't a short trade to take. That is a very strong bullish momentous candle, and you have a very tiny inside range doji there, and then the next candle opens and closes at resistance. You don't short that. The price is actually telling you right then and there, hey, we went down, we swept the previous day's lows, and we're closing at resistance. There's a good chance that in the next day, 2 or 3, this thing's going to break out. And it did. Boom. So we weren't even looking for shorts yet. Weren't even going to look for shorts until this thing started to show signs of slowing down. It did right here for 1 day, and it's up higher. I mean, damn. Like, if you fib this swing high down to that swing low, you're up there. You're up there retesting way above the midpoint. So there you go. I mean, you're above the 618. The 786 is all the way up there. And I know a lot of sellers would call that a retracement, and technically it is. But in my opinion, once you blast through the 50% or even the 618, I mean, yeah, I can see sellers jumping on here. It'd be much better to jump on it up here. But once you get up to there, then you have to start asking yourselves another question like, hey, is this actually just going to bounce and then reverse and go back down? Or has something else happened here? Look at the speed at which it was going down. It was literally going down. I'm sure you've heard, the old saying, it's cliche, take the stairs up, take the elevator down. Well, in this situation, you took the elevator up. So this is a massive level right here, August close. You can see technically this thing held as support on multiple tests. And once you set in this support right here, you could not break it. All right, so let me just put a line here. This is your daily support at a higher time frame, a monthly level support. But once you build in at a bigger level here, your first test ain't building in. You need multiple tests to build in support. You got it there. Boom, boom. So where's your lowest bearish close there? And then you want to really start to see this area start to hold a support. And you got it, right? Here's one test. Here's the second test. Third test. It's a deeper test, but still nonetheless a test. Here's another deeper test, but a close back above, and then set the trap. This is your trap. This is set, match, game. We went in on this day, the 247.50 strike, the 247.50. Why did we buy the 247.50? Basically, on the quarterly time frame, this looked really, really good. This looked really good. Right here is your yearly opening range. You set your yearly low, and then you have another bad quarter, and you go down, you make fresh yearly lows, and then you come up and you set a fresh yearly high. Boom. And then this is what we would consider a retest if you're going to get your kind of 3-bar formation here on the longer time frame. Remember, a 3-bar pattern looks like this, right? There's your breakout, then you have your retest candle, and then your breakout, right? This is essentially how candlesticks form, how bars form, how price forms. So I was looking at this as a retest of this move here. This is a breakout from this quarter. You did take out this yearly opening range and you closed the quarter above it. This coming back in right here was looked at as a retest only. And the way that it came down here, based on a news event, if this gap down was based on their little thing that they had the other day with the driverless cars, caused an overnight sell-off, but it held support and then broke down here to make people get bearish. They had so many people trapped on the bearish side of this thing that it was just a YOLO play. And we done really good this week. So I was like, I can risk taking, especially on the small account, I can risk losing $50 on a straight gamble because on earnings, that's all it is. There is no edge there. I thought this was going to be a retest, and I thought for sure if the news came out and if the news was bullish, if Tesla had really good earnings based on this being just a retest on the quarterly, based on the fact that the Dow is doing so good and the NASDAQ needs for Tesla to get involved in order to start making fresh all-time highs again, these were all really good narratives to look for that breakout, that move above. And we took the 247.50 strike because A, it was $50, and B, it was under the yearly opening range, 2024 yearly opening range. Now, Tesla closed short of making fresh yearly highs, which is a bullish stock at this point, all right? Once you get above that yearly opening range, you technically on the year are bullish. Now, if you're going forward on Tesla and you're looking to invest, I would wait for retests of 250.08 to see if that level holds. Now you have a big gap down here, but you did have a big gap here as well. And you filled all that pre-market. So I wouldn't doubt it at all if you don't come back down and retest 227.50. But with this kind of momentum here and with the 24 yearly opening range there and seeing how we're in Q4, you're probably not going to see these prices again. That is if if the stock is going to stay bullish on the year. If the investors assume, and by this kind of a move right here, you can pretty much assume that the investors are saying, yeah, this is great news and people are jumping back on the Tesla bandwagon. I would watch the 250.08 level first, and that's where I'd look for my bullish opportunities. But there you go, guys. Hopefully that helps you guys get situated for next week. Make sure you guys subscribe if you haven't yet. Hit the thumbs up for me, please. I really appreciate it. Thank you so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.